Hi, everybody. This is Brian Kinahan at CEO Mastery, where we move CEOs and business owners out of the middle to the front of the business where they can lead and generate more revenues and more profits with less stress and less of their time. I wanted to talk with you today about something which has to do with this COVID pandemic we're in at the moment. But just in general, when times are tough in a business, cash is where it's at. Cash is king, cash is king. We've heard it a million times. Why do we say it? Because it's true. You can be growing, you can be profitable, you can be all kinds of things. If you run out of cash, you're done. So the idea is you don't want to run out of cash. And especially in tough times, it really pays to know exactly where you are cash-wise. And even more importantly, to be able to see down the road and observe, prepare for perhaps a difficult cash situation. So there's this 13-week, you may have heard of it, but it's pretty common, and that is to do a 13-week cash projection. So I'm just going to lightly touch on how to do that. It's part of the CEO Mastery Academy. We teach that as an extra benefit. And by the way, if you are interested in getting out of the middle and getting to the front of your business, by all means, check out ceomastery.net. Check out our site. That's all we do. We help CEOs, entrepreneurs get out of the middle, get to the front, more revenues, higher quality of life. So let's talk about this cash projection. The way you do it basically is almost every company has AR and AP. So you have your AR, AP, you put that on your sheet, on your Excel sheet or your Google Sheets, and then whoever's in charge of AR and who's ever in charge of AP and of paying the bills sits down every week, looks at the latest aging, and then for AR projects when those collections will be made. Now, the person who's normally handling AR has a lot of information. Perhaps the CEO or the salesperson or a CFO or somebody has a little more leverage with people who owe money. So this is a team effort. So they get together and the AR person goes, okay, here's what we got. How about, collecting this one here and this one here and this one here. And then together they team up to collect the AR as quickly as possible, as usual, presumably. AP, the same thing. Now here it's a senior person who works with the AP person and says, okay, this is our AP. Since cash is tight, we're going to go ahead and lean on our trade and allow them to lend us money at 0 interest rate because we just want to be sure that we have all the cash we need. Of course, that's within the constraints of a reasonable relationship. Maybe they're holding orders if they're shipping things. It's something that calls for a judgment by somebody who is in a position to make that judgment. Nonetheless, you take your AP and you spread out over the following weeks when what amounts are going to be dispersed. Okay, great. The next thing is you have future sales, right? Future sales of services, future sales of goods, and there's expenses related to that. So you map out, you do a forecast below that of what you expect to sell over the coming weeks and when you expect to get cash from that. If it's credit card, fantastic. It's cash right away, minus 2, 3, 4%. But, that's one thing. Or if it's COD or paid in advance or whatever. But otherwise, if it's just normally billed, you anticipate when it's going to be paid, 30, 60 days, whatever your terms are. And that way you can now add to historically your AR and AP, you can add future collections from future sales. And then the last part really is you have expenses that you pay that do not go through AP, including payroll primarily, but you have other expenses you pay that don't go through AP. Most of those are on your profit and loss, your income statement. Some of them are not. In other words, they have nothing to do with revenues. They may be principal payments, or you may be paying back an investor for purchasing some of their shares or whatever it is. Anyway, all those things that don't show up on AP go there. And if you buy from manufacturers and you don't run it through accounts payable, you run it through factory payables or vendor payables. Of course, include those in the prior discussion I just had about AP. So swell. So now you set that all out, you look at it, and you see in the future things look rosy. Maybe they don't. Maybe in week 10 it looks like you're going to hit a wall. Okay, what can you do? You have 10 weeks. That's amazing. That's a lot of time. But now you know to prepare. And because you can see it down the road, you can take measures. You can call your bank. You can call your grandmother. You can look in your own savings account. You can look at collecting faster. You can look at paying slower. And you can look at some discretionary expenses you're going to cut. All kinds of levers. I probably mentioned just some of them. There are more. There are plenty more. So that's the game. Of course, every week you're going to update this. So you're going to update with actuals, right? Any sale that you projected for the prior week that was a projection last week, but now is an actual, that goes into whatever it is, that goes into AR, and it comes out of that section. So it's a lot of information, but what I'm trying to tell you or show you or explain to you is that it is not that complicated, and it can be life-saving. The last thing you want to find out is like, oh my gosh, we're 100K short and we have 3 days to figure it out. Do not do that. You want to see your cash well out in the future and manage it very carefully. Well, thank you for watching that video. I really hope you enjoyed it. And if you want to talk with me about helping you, please go ahead and schedule a time by clicking on the link below. I look forward to it.